Let us study about the subtopic on trade payables. The learning objectives: to prepare journal entries of transactions affecting trade payables, prepare a trade payable account for an individual credit supplier. Trade payables: when a business buys inventory on credit from suppliers, this means that the business receives goods and services from the suppliers first and pay the suppliers later. Suppliers who sell on credit to businesses are known as trade payables or creditors. Trade payables are classified as current liabilities in the balance sheet. Next, we will learn how to record credit purchases of goods. The journal entry is debit inventory as asset increases, credit trade payable as liability increases. This is so because the business has not paid for the goods purchased. Take note that the amount is after trade discount. Sometimes goods can be defective or faulty, so the business will return goods back to the supplier. In this case, the journal entry is debit trade payable as liability decreases since the business is not going to pay for the goods returned to supplier. Also, need to credit inventory to reflect the decrease in assets in the warehouse. Take note that the amount is also after trade discount. Payments to suppliers. This is when a business pays to its suppliers. When there is no cash discount received, the journal entry is debit trade payable as liability decreases, credit cash at bank or cash in hand as asset decreases. Sometimes the business receives cash discount from supplier. In this case, the journal entry will be debit trade payable, credit cash at bank or cash in hand, and credit discount received. The business will credit discount received as it increases the income of the business. In summary, a trade payable ledger account will look like this. The opening balance is the amount owed to the trade payable on the first day of a month. It is a credit balance as trade payable is a liability which has a down-up nature. When the business buys goods on credit, the trade payable account increases as the amount owed to creditor increases as well. When the business returns goods to creditor, the trade payable account decreases as the business is not paying the creditor for goods returned. As such, the amount owed to creditor decreases. When the business pays creditor and receives a cash discount, the trade payable account decreases as the business owes the creditor lesser after payment. When there is a balance, the balance will be brought forward to the next month. This ends the section on trade payable. Click on assignment 1 on trade payable to attempt the question on trade payable. It is found at the bottom of the page. So, yep, have fun!